Welcome back to Startup Sim. In this tutorial, we are going to look at the bottom line of the income statement. It starts with realized gains and losses. This has to do with currency transaction. When a company buys another currency, for instance, say in the US, this company has bought 100,000 euros. This company can potentially make a profit if the euro value goes up relative to the dollar. If this is the case, then it will record a profit when it sells these euros. So when the transaction is sort of cancelled back by buying back dollars with the euros that you had purchased earlier. This is a profit. Then until this transaction is completed, there is only a risk. Once it is completed, it becomes either a gain or a loss. And this is what we had alluded to when we were discussing the bottom part of the balance sheet, where we calculate only the risk. And that's why this line was called unrealized gain. Here, this is realized. So if we total this up, then we have gross earnings, which is the difference between the earnings that were calculated on line 32 and all of the income and expenses, including the realized gains and losses, where we can calculate then the gross earnings. The gross earning is the basis on which an income statement will be charged. Of course, when there is a loss, there is no income tax, and when there is a profit, such as in Europe, there will be a tax. Then capital transfer tax does not apply here, but we then have the net earnings, which is sort of the profit of the company in that quarter, from which the company may decide or not to pay a dividend. And the last line is the retained earnings that will remain in the company's account, that will be retained, which are then shifted to the balance sheet.